It's 10 a.m. here in Lagos, Nigeria. Welcome to Business Morning. It's going to be 55 minutes of serious and current business talk here on Channels Television. I'm Amy John Mekwa. We start, as usual, now with the global oil prices. Prices fell on Tuesday after notching their highest gains in more than a month in the previous session as global inflation worries overshadowed the prospect of possible OPEC Plus output cuts. Brent crude futures fell by 39 cents to $104.70 a barrel. That's after it climbed by 4.1%. U.S. West Texas Intermediate crude forwards at $96.79, and that's down 21 cents following a 4.2% in the previous session. Inflation is near double digits territory in many world's biggest economies, and even like in Nigeria, a level not seen in close to half a century. And investors are concerned that more aggressive interest rate hikes will follow following the United States and Europe. Well, also weighing on prices is Russia's oil output, which has exceeded expectations in the wake of the war in Ukraine. The head of International Energy Agency has said that Moscow, which calls it actions in Ukraine, will find it increasingly difficult to uphold production as Western sanctions begin to bite. IEA members nations could release oil from strategic petroleum reserves if they find it necessary when the current scheme expires. From there, let's go to the commodities space now. And what's happening there is that Chicago Board of Trade corn futures set a 2-month high on Monday after a U.S. crop tour last week found damage from hot, dry weather, and organizers projected harvest would fall short of government estimates. Wheat futures rallied to their highest level in about 7 weeks, while soybean fell after the crop tour forecast at a large U.S. harvest. The U.S. Department of Agriculture, in a report issued after the close of trading yesterday, rated 54% of the nation's corn crop in good, excellent condition. Well, from there, let's come to Nigeria now. The managing director of the Bank of Industry, Mr. Olukade Piton, has been speaking of the bank's efforts towards deepening growth and contributing to the nation's socio-economic development. Mr. Piton explained that through strategic partnership with French Development Agency, the bank has accessed a €100 million line of credit under the Transforming Financial Systems for Climate program of the agency, and that's in collaboration with Green Climate Fund.
We find an opportunity to...
The forum is bringing in heads of development finance institutions who are bringing in their plans to improve the nation's socio-economic development. One of the primary drivers of the Bank of Industry is to accelerate the industrialization of the Nigerian economy by providing financial and business support services to environmental friendly and sustainable projects across key sectors of the economy. And this meeting comes at a time when efforts to support businesses is receiving a boost.
We set up at DOI a full-fledged environmental and social governance team in 2019. This team manages our sustainability strategy and activities.
Globally, as well as in Africa, the challenge confronting development finance institutions are the same. But experts are of the opinion that with more commitment through investments in critical sectors of the economy, more socio-economic growth will be achieved.
A sustainability certified development bank enables the economies to transform from no or low tech and low value added to high tech and high value added economy that works for all sectors of the economy.
And just after the second regional meeting, members of the Association of African Development Finance Institutions also converge on this whole to collaborate on how to foster partnerships that will be beneficial to members.
The challenges are similar, in terms of corporate governance, in terms of how do you balance profitability, development goals. How do you ensure that you have an institution that is sustainable by strengthening the regional association of Nigerian DFIs? We stand to benefit this action. because we believe that that association, in the fullness of time, must affiliate to the continental body of some sort.
Their renewed collaboration is expected to yield tangible results that members of the association attain greater feat that is geared towards employment generation, industrialization, and foreign exchange earnings for its people.
You're welcome back. You're still watching Business Morning here on Channels Television. Well, some weeks ago, bakers in Nigeria went on a 4-day strike to drive home their points, which is that they're surging operational and raw material prices. After the strike, the price of bread has never remained the same. I know even in your area, you have felt it. In my area, it's almost like double. And people like us who love bread, we have to face it and deal with it. Well, we have one of the efforts by some bakers in Nigeria is that they're looking for domestic alternative to wheat, because we do know that wheat is largely driving the price of this because of the war in Ukraine. And so we have one of them thinking of that alternative, Mrs. Juliet Aigbe, founder Cake Flair Bakery, joining us in the studio now to discuss this. Hi, Juliet. Good morning. Good to have you in the studio.
Good morning. Thank you so much for having me.
Good to have you. So you guys have made bread very expensive for us. That's not fair.
We don't produce wheat.
Okay.
That is the problem.
All right, so we import it. Obviously,
Yes.
about 90%, more than 90%
Yes.
is imported.
Ridiculous, I tell you.
And yet
so,
we have the ability to produce it, to plant
okay,
and
let
produce.
me put some context to this.
Okay.
Wheat grain is a temperate grain. It's a colonial grain. It's not a grain that's grown originally in Africa. And so it came with the colonial masters, and then we acquired the taste to eat bread. Bread is not an African staple. But I feel like, okay, we already have bread here to stay with us. So why can't we also backward integrate? Why can't we also infuse our local grains into wheat production? And millet is the perfect, let me say, marriage with wheat to make bread. So we have tried to do the 50% millet intervention with bread production. It is, I call it a miracle bread, as a matter of fact.
Yeah, okay, miracle bread, we'll find out in a couple of minutes. So, I mean, it sounds like from what you have explained now, we're still being colonized because our taste buds are being colonized to eat wheat bread.
Yes.
So we can actually do something domestic. I know we tried the cassava bread during the administration of President Goodluck Jonathan, but it didn't seem to find the light of the day. Do you know what happened?
Before we talk about that, we need to re-engineer our palates. That is the way to break
Is
this
that
jinx.
what happened?
What happened then was...
Because I also heard that the availability of the raw material is also a challenge, even when you talk about cassava.
Yes, we did have a quantity issue back then. However, at that time, wheat was not threatened. There was no threat on the price of wheat. So if you ain't broke, don't fix it. So I think manioc flour, which is the flour we get from cassava, came in at the wrong time at that time. And then the advocacy was not strong. So we're trying to learn from all the mistakes that the cassava intervention created. And we also want to see cassava come back as well. So the whole idea of domestic grain integration initiative is just to bring about local grains to bear in wheat production. I feel it's morally wrong to have bread made with wheat 100%, because we have grains that can complement it. And guess what? The grains that we have are more nourishing, they're more nutritive, they are very high in antioxidants, high in protein, high in fiber. Why can't we infuse that in our breads? Because our children eat breads every day. So we are here to say, let's start infusing millets into bread production.
Okay, so that's a millet bread in front of you.
Yes, we have 3 variants right now.
Okay.
We intend to go the full distance. We have the savory millet bread, and we also have the light millet bread, depending on the range and the degree of millet intervention in it. Yes.
Okay.
This has 50%, and this has 25%. We have for 30, 40, we've tried 70%, 80%, but millet is...
How is 70%?
It tastes like crumbs, like brownies. Crumbs so high because it's a gluten-free
So like
grain.
it's disintegrated?
Yes. Now, wheat flour is the only flour that contains gluten. And so without that gluten content in bread, it can rise. You have pizza bread, so it can't rise without the gluten content. So what we've done is what percentage of wheat can the millet, can the wheat grain accommodate so that it can still get, your nice rice, fluffiness. You can see very soft, the texture is very soft. and the taste is amazing.
I expect you to say that. I don't expect you to say otherwise.
Other bakers, I mean, we tried a cross-section of bakers came together with me to say, let's try this in the different bakeries. What do you think? What do you think? And we all like, wow, this is really amazing. And it's not just my...
Okay, so the thing is, in countries like Egypt, for instance, bread is not exactly what we call bread. You know, they have their own bread.
Different types of
Why
bread.
can't we have our own bread? If wheat is posing a challenge for us, you know, why can't we have our own bread? If it's millet, even if it's disintegrated and then there's a way to put it together, you know, why can't we have it?
Mind you, even in Egypt, 80% of their grain intervention is imported wheat as well.
Yes,
And
yes.
they're
That's
very
why they
high
have
on
a lot of
pasta.
trouble now.
Yes.
We're talking of debt defaults in Egypt because of this importation.
Absolutely. And Africa has a vast array of different kinds of grains that are not even carcinogenic. They are wholesome, they're nourishing, they're high in fiber. And I'm thinking, what have you been waiting for all this while? So we have solved the problem. We say, we call it Nigerian bread because we can actually export this to the rest of the world as well.
Okay, so you've talked about the texture. So we still need wheat, even though at a suppressed level. And you say, I've not tasted it, so I don't know.
You can taste it.
You say the taste is good.
Amazing.
So how do we convince Nigerians now? Do we come from the path of saying, oh, that bread you're buying, that used to be 500 naira, which is now about 1,000 naira. I think it's about 800 naira, 900 naira.
1,000 naira.
You can actually get it for 500 naira
Yes.
and take the millet bread.
Yes.
Do we come from that perspective, or do we just plead with Nigerians to say, please adjust your taste bud because these are the realities of today?
While we encourage Nigerians to adjust their taste buds, there are pockets to force them to, because a pinch rubber of wheat flour goes for about 3,000 naira, while the same quantity of millet goes for about 1,000 naira, 1,002. So that would tell you that you need to change your taste buds. And why would you not want to change? Why would you not want to change your taste buds if it tastes better, it's more nourishing, it's cheaper, more affordable, and again, it's going to help our national GDP. Currently, right now, we have 10.5 million employments in the confectionery sector. If you shut down that sector, where are you going to get jobs? We see this high insurgency, kidnappings, and insecurity. If we don't fix the food problem, there might be a food revolution in the offing.
Then we also look at the challenge that the cassava face, which is, I mean, availability of raw materials. Agriculture has suffered a setback because of insecurity. Where are you getting your millet from? How sure are you of the source?
So you see, a journey of 1,000 miles starts with a step. So the first step is identify the fact that we can use millet to kind of incorporate that into a national staple. The next step is now to begin to talk to the actors in the value chain, the farmers, the growers, the transporters, and the sellers, to say, and also the millers, that let's come together and see how we can build a strong network of connectivity, a cohesive group, so that whatever issues we have, we can begin to even protect the farms if we have to. But I also think that sometimes these things are really, they're really hyped. It's not really as bad as they say it is, because I've actually gone to the hinterlands to see where this millet is being grown. I've seen that it's rich in the Sahel and the other savanna regions of Nigeria, like Kwara, Niger, Kogi states. It's grown in abundance. They use it for okababa ogi. They use it to make kunu and stuff. So it's already in existence. Now that bread is going to start tapping into that demand, we need to actually improve the agronomy so that there is more automation in the entire agronomical process for the millet farming. You know, so but I also feel like the conversations are very important, because that really helps. When we know their problems, we know the issues they're encountering, we can begin to improve that. I also feel like we need to start putting rail tracks from farms to markets. So it's easy. People say, how do I get this millet flour? You can actually get it in the open markets. The issue is, do we have enough quantity to begin to feed the nation? That is left to be seen. We need to also first encourage Nigerians to eat millet bread. And so with that demand, the growers, the farmers can now begin to expand their farms, and then government needs to also intervene to help, these farmers, build the solid base that we need. Backward integration. If we need to control the source of that value chain, if we don't do that, I mean, it's going to just trigger.
Who is the we you're talking about? Because one could actually say that we should deal with these problems before, because Nigerians got their heart broken with the cassava bread. When people were warming up to it, we saw that the raw material was not actually available enough, for a mass production of it, because they say when the desirable is not available, then the available becomes undesirable. So as you said, if the purchasing power is going to push Nigerians to embrace millet bread. And they were now like, okay, let's open up our hearts to it, and it's not available. So don't you think that we should deal with these back-end issues first? Because you're talking of Kogi, you're talking of all those states. Then, of course, you mentioned the fact transporting those raw materials to where you guys are, the Lagos people. You guys are the ones, you know, you're in the urban areas. You understand? How do you connect it? The usual problem of getting the raw material from the farm to where the producers are. That is a major thing.
Absolutely. So when we did the hangouts, the Domestic Grain Initiative hangouts, we actually brought in some farmers. We spoke to some up north on the phone, and then we brought some physically at the event, the millers and the sellers, those who also bring in the transporters. So they actually did highlight some of their problems. And we said, look, you know what? For every problem, there is actually an idea for a solution. Things like rail tracks for moving goods, we need to put that in place. I know we already have rail tracks for moving people. We need to have the ones that will move goods from farms.
That's very capital intensive.
It has to be done. That's the only way. I mean, if we don't start fixing those problems, what are we doing? We can't just be talking and hyping the rhetorics. We have to start putting our skin in the game, taking action, and actually start doing that. We need to start collaborating. It's not a one-man show. It's a whole group of people, many actors in our value chain coming together. I'm just a spokesperson for the entire army of people who are saying, go, let's make this happen.
So who are you guys talking to?
We're talking to ourselves. The stakeholders.
Yeah, but you guys can't do the rails.
Well, you see, that's advocacy we're talking about. We're also trying to see how we can get other policymakers involved. We need to talk to policymakers. We can't do this in isolation. The government agencies, the parastatals, Ministry of Agriculture, we're talking to all of them. We're trying to make them see how can we start building rail tracks. We need to build rail tracks. However expensive it is, we need to face it. Because you can't keep burying our head in the sands and expecting things to just work or a miracle to happen and then the price of wheat just goes back. It ain't going to happen. So we need to start, talking to all those stakeholders. And Nigeria has money. We have money. Put the money where it ought to be spent. Fix the infrastructure. If we fix infrastructure, power supply, roads, networks, Nigeria can improve. I am so passionate right now about this issue. Nigeria is one of the greatest countries on the face of the earth. If we start backward integration and start putting our skin in the game, we can make this happen.
The government says Nigeria is broke.
Nigeria is rich. We are rich. We have the human resources.
Our debt servicing now is more than our revenue.
60% of our arable land is not cultivated. What are we talking about? We have the revenue.
We have the potentials.
Yes.
But as we speak, our debt servicing is higher than our revenue.
That's because our policies are not tailored towards backward integration. I also heard that the federal government took a loan to begin to improve wheat agronomy. As good as that is, I feel those loans should be geared towards other domestic grains and how we can hybridize the wheat, because the wheat grain is actually a vital grain. However, if you check the rhetoric around even millets, it is described as a grain of the low-income region. We need to change all that semantics and begin to see it as a power grain. It's a power grain that can kind of help us improve our nutritional level and also improve our GDP.
All right, Mrs. Juliet Aigbe, I feel your passion because I'm a lover of bread too. I must tell you that too. Let's hope that this thing can work. And I mean that's why we have you here on Channels Television, because we do believe that Nigeria has all it takes, and all we have to do is look inwards and be determined to work.
Yes.
From the inside out.
And I must say that every government agency should support us. We're not even disrupting anything. We're just saying we're creating more options. So we can, for those who can't afford to eat wheat 100%, you have all this to fall back on. We need to create more options for ourselves.
All right.
That is how to make a difference.
Okay, thank you so much, Mrs. Juliet Aigbe, founder, Cake Flair Bakery. Thank you so much. We wish you all the best.
Thank you, ma'am.
And we do hope that these Nigerian taste buds will accept this and the raw material will be available too.
Thank you, ma'am.
All right, so that's it for this segment, but we have more commodities to discuss after the break. It's still Business Morning here on Channels Television. Welcome back. You're still watching Business Morning here on Channels Television, where we just finished our conversation with millet bread. Maybe you should go look for it and try. One person I want to ask if she's tried is Bolanle Agbaje. She's here to discuss the commodities for this week. Hi, Bolanle. Good morning.
Good morning. Thanks.
Have you heard of that millet bread?
I've heard of it, but I haven't tasted it yet.
Oh, I wish you had.
Because of this, I think it's something I would have to. Because we come here several times speaking about other substitutes and initiatives by the government, and it's such an amazing thing that some of these bread stakeholders are trying to adopt in terms of like looking for substitutes when it comes to the high cost of wheat. It's amazing. I think the only challenge that they would face is trying to change the taste and preferences of many consumers. I think if they remain in the market and they stick to the initiatives and make it stay, I feel like the Nigerian consumer would more or less find substitutes, especially if we're talking about bread at almost 1,000 naira. It's ridiculous at this point.
Yeah, and so you're one of us who believe that, or not one of us, one of those who believe that when the desirable is not available, then the available becomes the desirable.
Exactly. That's what always happens eventually. In the short term, it's always very difficult, but going forward in the long term, especially if this millet, bread seems even healthier than the wheat.
Yeah, for those health-conscious people, that would be a major factor to drive them.
And if there's no significant difference in the taste as well, I'm sure it's something that Nigerian consumers.
I think I'll try it. I'll try and taste it.
I think I'll do the same.
I know if there's really, but I'm just worried about, Nigerians, we adapt easily.
Yes, we do.
We tried it with the cassava, and then cassava was not enough.
Yes.
For the production or the baking of the bread. So what if Nigerians now embrace it and then you don't have the raw materials, or they're stuck somewhere in the rural parts of the country, they can't get it to the urban area.
The previous guest mentioned, she did focus on the fact that the government has to, support the initiative. They can't do it alone. You always have to have the support from the public sector in terms of funding, in terms of fixing the road transportation network, in terms of, electricity as well. And those are the aspects of the economy that actually promote and boost, the activities of the private sector. And that's, it ultimately boils down to the government.
And she did say Nigeria is not broke. She will not accept.
She will not accept. You don't too. I think even when you talk to the government officials, a lot of them actually speak on the fact that Nigeria is definitely not. We have potential right now. It seems like we have a high debt servicing cost and all that. But if we do play our cards right, we actually impose policies. Even the IMF, the World Bank, they've come several times to give us the direction in terms of policies that we should adapt in terms of exchange rate, inflation. They've tried to direct us in that sense. If not, they would have.
Yeah, but there's been criticism too with some of those suggestions by IMF that they're not really healthy for the economy.
Yeah,
I mean, for instance, in Egypt now, they devalued their currency, I think in June, July.
Yes.
Now, if they are to access another, because they're in a dire situation, they have to devalue their currency again.
I think we haven't necessarily tried some of those, policies. We've implemented some of them, but a lot of them haven't been tried. So it's usually a trial and error situation. You try it, you see how the market reacts to it, and then you look for either alternatives or you stick to the policies that you've more or less implemented. The fact is Nigeria is not even they're not even pushing ahead to try some of these policies, especially with the exchange rate. They've spoken severally about a unified exchange rate. That still is not the case.
Is that possible?
I think it is, in the sense that if the central bank actually draws down to focus on the policies that act there, the policies of unifying the particular exchange rate, I'm sure it definitely would be easy and more or less give positive, although it wouldn't be great in the short term, but in the longer term it definitely would boost our economy significantly.
All right, so we see that oil prices have eased.
Yes.
While, of course, liquefied natural gas is still surging.
You know something? We've been speaking about oil for the past, months. And the fact is that, although oil prices have increased by about 50% from the beginning of the year, natural gas prices have actually doubled or even more than doubled. And we are one of the, major top producers of natural gas in Africa. And I feel like, oil is like the main, the attractive topic. And I think that's why, they leave natural gas. But right now, natural gas is doing amazing.
Natural gas is it.
It's where the money is.
Yes.
And, now that most of these Western countries are entering the winter period, natural gas would even be, especially for electricity generation, is actually going to be more significant. And one news that we actually saw is, we had spoken about the fact that a lot of these European countries are looking for alternatives to Russian natural gas, for example, and Mozambique is one of them. Although we've seen that the exports have been delayed, but we do expect that in the next week or so.
What's causing the delay of the exports?
Well, obviously, it's the first time they're exporting this particular product. So I'm sure that there's some things to do with logistics and other things, other aspects of, the export business.
At least they're on the verge of exporting. Where's Nigeria?
They were actually supposed to export, I think the target was 2024, and we're in 2022, and they're ready to, push out their first, shipment. And it's actually amazing. But Nigeria, I don't know, I think we're still in the market. We produce about 22 million tons, significantly high. I'm sure, with what's happening in Mozambique, some of those NLNG would probably be looking and be trying to find out where to,
But NLNG is still struggling to meet with domestic demand.
Yes, they are, due to the fact that, lack of infrastructure and all of that. But I think with exports, it should be much easier to export,
It should be much easier than feeding the domestic?
Yes, because to feed the domestic market, you need to literally build pipelines around the area to feed it effectively, and rather than rely on, some of these trucks that move, the natural gas. Road network is still terrible, and that's, contributes.
And we still have vandalism and theft.
Yes, so that contributes negatively to the domestic, feeding the domestic market. But when you're talking about exports, it's literally just to take them to, the ports and more or less.
So we had the EU here some months ago, working on investments for this export.
So although that's great news, it's just to watch and see what comes out of this meeting that they had. But I'm sure looking at what's happening in Mozambique is actually great news for Africa, in the sense that they were not even players in the market to start with, and now they're more or less. I think it's about 3.4 million tons per year that they're looking at, and it's significantly huge, considering that a few years back it was more or less up to zero.
Yeah, Nigeria is still the giant of Africa.
You are still the giant. We still have it in there.
All right, Bolanle Agbaje, thank you so much for always being there and explaining some of these things for us. We'll see you on Thursday.
Thank you for having me.
All right, just before we move to the markets now, let's bring you up to date on market prices. Oil market prices. Prices fell today. That's what Bolanle just explained there, after notching to its highest. And we see major drivers of that market at this time is Russia's output, which has exceeded expectations in the wake of the war. And then the International Energy Agency is saying that they might actually start releasing more oil from strategic petroleum reserves, and to cushion some of this effect. And Nigeria is trying to find its way somewhere in there. So now let's move from the oil market to the money market. Yes, it's the money market with Will Ibong. Hi, Will.
Hi, good morning.
Good morning.
Ini, speaking of giants of, equities market in Nigeria is still the giant. It's still leading globally.
We're talking about this before the show, and we talked about how global food prices, they're reducing at this time. But in Nigeria, it's actually surging.
It is still surging.
Then when it comes to the equities, the markets, the crypto and all, the markets are going down, but equities is going up. I mean, I know we had a negative yesterday, but I mean...
It's always an inverse relationship when it comes to Nigeria and the rest of the world. We're seeing that happen with global food prices, with the equities market. While the global equities are in decline, Nigeria's is going up year to date. It's still at 16%, and that is out of this world. It's an outlier right now, looking at what's happening economically, global economic downturn. Nigeria is still
I tell you
thriving.
one solution to that, Will. You eat the millet bread, and then it will reduce the
No. The millet bread is going to spice things up. So let's just look at what happened yesterday, how the market, played out in yesterday's trading session. The all share index dipped 0.01%. That's about 1 basis point down from the equities. Now, 49,676.75 points. That's where we're at as of yesterday, and we're still at 26.794 trillion naira for the market capitalization. As I mentioned earlier, year to date are settled at 16.3%. Month to date loss, however, is at 1.4%. Now, total volume of trade, volume traded yesterday rose by 20.4% to 232.94 million units. We're seeing value at 2.18 billion naira, and deals we jumped up yesterday to 4,425 deals in total. Now, look at sectoral performance. Yesterday, we saw banking was the only outlier, 0.25% reason, consumer goods, and the rest of the key indexes were in the red, except for industrial goods, which was unchanged from the closing figures on Friday. But we have Richard Akimoladu, equity trader at CSL Stockbrokers, to give us more insight as to what happened yesterday in the market. Good morning, Richard. Richard, do we have you there?
This morning.
Okay, good morning, Richard. Now, Richard, we're seeing the market open on a negative note yesterday, despite the fact it closed positive for the week, 0.6% up for the week. And now we're seeing the marginal decline for the all-share index. Do we see, we're expecting, should investors brace for more sell-offs, more profit-taking in the months to come for the rest of the month and in September?
Okay, so as you rightly mentioned, so last week the market was closed on a positive trajectory, and this was due to result that was released to the market. We saw the Zenith result and Stanbic results, and as you know, that this result came with some good news. We saw a dividend of 30 kobo from Zenith and 1.50 kobo from Stanbic, and this actually spurred some activities on this name. And on the back of these, we saw the market close on a positive note. So looking at the market, the market is majorly dominated by local players and local investors. And what they are looking at is they're looking at corporate news, positive corporate news from all these listed entities to actually take position. Majority of them are already in the market, and they're looking at a quick gain from the market. So when they see positive news from any of these listed entities, they want to take advantage of it and quickly bail out of the market. So going to the new month of September, I believe we continue to see mixed reactions as we expect some more result from some of these banking names, and we know that some of them will come with some dividend news. And this morning we saw some news in the market. Fidelity Bank, the proposed acquisition of like 100% equity stake in Union Bank UK. I think the market will digest that, and we might see some positive outlook on that name. And also, we saw news from Access Bank using the advantage of this, their whole coal arrangement to acquire majority equity stake in a pension outfit. So these are some positive news to the market. I'm sure that the investor will digest this and try to take position as we go into the month of September.
You're talking about dividend yields and positioning. We saw yesterday also that many institutions, corporate institutions, are going to be issuing commercial papers and with high dividend, with high interest yields. Is that one of the playouts we're going to see, that equity investors are going to move their funds, switch portfolios to the fixed income space to try and get better returns for their money?
So if you look at it, that the yield in the money market rates, the yield are low, and some of these listed entities are trying to take advantage of this low yield actually to raise funds to support their businesses. If you look at the last auction, we saw spot rates in the 364 days being we saw a significant move in that rate from about 7% level to about 8.5% level. So I believe that we are beginning to see major movement in yield in that space, and we might continue to see funds being moved from the equity to the money market section.
Thank you, Richard Akimoladu, equity trader, CSL Stockbrokers. It's always good to talk to you. So, Ini, we're going to end up with the market. I was talking about the trend. Yesterday, the equities market was down, but today we see yesterday we saw the NASD market, the unlisted equities market, up 0.26%. It's continued a positive trend from Monday.
I'm glad they're back to the 1 trillion.
1 trillion, and they're sitting pretty there. It's really amazing.
For a couple of weeks, was up to weeks. They were 900.
They were now right now on their back, so that means bullish sentiments are returning to that market, and we're going to probably see more good news, get more good news from them.
We'll hope so. Will. Thank you so much for the market analysis. We'll take a break now. After the break, we'll head to London, and of course, there's the other markets. After the break, here is Business Morning and Channel Television. You're welcome back. This is still Business Morning on Channels Television. We head to our London studio now. Bank holiday is over. Juliana is back in the studio. Juliana, good morning. Good to have you. Although not very good news, the pound is getting hit. It's down to, what's the lowest in 20 years or something? And it's all about the fears of recession, liquidity squeezed, year of the squeeze. Not very good one at this time.
Good morning, Inna. You're absolutely right. In fact, you've described everything that's happening to the pound at the moment. At a decades low, trading against the dollar of about one British pound at the moment can buy you $1.18. And if you look at the British pound highs before the Brexit referendum in 2016, we were trading at about £1 British pound sterling to $1.40, $1.45. Now, lots of economists do believe that the British pound could reach a low that we haven't seen since 1985, which would mean £1 is equivalent to about $1.14. And this is all about the recession. We know that the Bank of England have forecast that the British economy will enter into 5 quarters of recession starting perhaps before the end of the year. So now a lot of economists are saying what are going to happen to interest rates. Lots of interest taking into Jerome Powell's speech at Jacksonville. And we are going to be waiting to see what happens when the Monetary Policy Committee gather next. Inflation currently at 10.1%, a fresh 40-year high. On Friday, the Ofgem energy regulator increased energy bills. There is a huge squeeze at the moment. Government not really doing anything. We are going to wait on Monday to find out who succeeds the embattled Prime Minister Boris Johnson. And until then, these recession fears are hanging around the UK like a dark cloud.
Yes, it is. It is, Juliana. We do hope we're counting down to Monday there. But, I mean, we can't seem to talk enough about the energy bills, up 300%. And now we hear the EU has an emergency plan. The UK is no longer in the EU. So will it help? Does it give any buffer?
Well, yes and no, of course. The EU, even though we are not part of the bloc, we are still a European country, and usually any steps that they do take is being closely followed by the British government. Now, Ursula von der Leyen, the European Union Commission President, has said that an emergency measure does need to take hold to try and get them out of this energy recession that they're going through at the moment. We know that Russia has a really strong chokehold on energy supplies reaching Europe. I believe there was a story this morning saying that they started squeezing the supplies to France. And now we've heard from the 2 big European energy giants. There's Uniper, Germany's biggest, and then Vine Europe, which controls energy supplies in Austria. And they're saying we need some support, we need some bailout. So this emergency meeting is going to be taking place today. It'll be interesting to see what sort of emergency measure they are going to take. Are there going to be state-led government bailouts for the energy firms? Are individual households going to receive some sort of help so they can pay for the bills? And I think that's exactly what is needed here in Britain. I keep saying it because it is a monumental amount. I just got my energy bill last week. It is going to cost me £350 to heat my home in September. And now we're expecting annual energy bills to rise again in this country to about £6,000 a year coming from January. It's just unaffordable for the vast majority of people. So I think government ministers will be keeping a close eye on what announcements come out of Brussels today, and perhaps that will pile on the pressure for the British government to do more as soon as possible.
Juliana, we really do wish you the best. I mean, just painted the reality there, you know, driving it home, and doesn't look very nice. But so we do hope that obviously something good happens and gives a little bit of help, you know, to households. We'll talk to you at 1:30. Okay, so from London now we head to crypto and see what's going on there. Fear Greed Index, I think, is what we would start with. seeing if the market has received any buffer, not, the energy challenge in the UK. That's not affecting it so much. We do hope it's not that bad there. But the market doesn't it looks a bit better than yesterday. Yesterday, the fear greed index was 24. That means the market was in a very fearful, frightful state. It's a bit better this morning, but it seems to be hovering between 24 and 27. Remember, on Friday, we had fear greed index at 27, and then yesterday, Monday, it went to 24, and then this morning, it's back to 27. We'll see if we'll get close to that 50, if at all, with all the headwinds that are going on globally now. So if we can see that market. If we can see that market now, there you see the fear greed index is at 27 this morning. Let's see the market cap. There you go. It's positive this morning. Yesterday we had a negative in 24 hours. Now it's positive. Market cap is a bit higher there, more than 4% higher. 24-hour volume, more than 18% at 66.54%. BTC dominance has dropped by 0.45%, is now at 39.34%. Let's see the price of Bitcoin at this time. Yay! Yesterday it was about 19, now it's gone to 20,414.36. We don't know if this is consistent, if we should be hopeful, or we should just, just hold our hearts and wait. 24-hour volume was there, and then the price of Ethereum also doing, a little bit good, 8.79% at 1,579.86. Top alts by market cap, we have the usuals, and it's not double digits, but at least some green there, 3.61 for BNB, 4.34 for ADA, and 3.37, just there, but we do see if we'll see if we can get double-digit top 5 gainers. At least they are not the stable coins, so that means, and there you see them in double digits, so it does look a bit good. We're supposed to have Olumide Adesina join us to give us. Hi, Olumide. Good morning. Thank you for joining us on the show.
Yeah, thanks for having me.
So a little bit of reprieve between Monday and Tuesday. Is this going to be consistent?
I don't think so. It's best to describe the market as being choppy. If you recall that after Friday's outbreak from the US Fed chief that he's going to increase ammunition on fighting high inflation, you could see that the market moderated significantly, including equities market. And that just tells you that the US Fed has come to reality that they've done little to fight high inflation. And that's why we saw sell-offs. So despite the little rebound we're seeing, the reality is that the global economy faces so much crisis. You could see what's happening in China, property crisis, high energy and food cost in Europe. The fact that we're seeing household debt in the United States going up tells you that pretty much investment around risky assets might not get that excitement. So despite the short-term bound we see this morning in Bitcoin over above $20,000, the fact that the news coming out that the US Fed might start reducing its balance sheet by $95 billion every month till December tells you that the bulls have a lot to fight for.
Okay, so Olumide, I bumped into a story this morning that Afghanistan is going to ban the use of cryptocurrencies. Do you see that making any impact?
Well, it has little or no impact on the crypto market. You should understand that Afghanistan plays a symbolic role in the economic power play in world economy, and that's pretty much because the country is war torn, and so the systemic exposure isn't that exciting. And to counter that, Iran recently set up crypto regulation just to be able to break US sanctions. You call that the United States and its allied forces sanctioned the Persian economy because of the nuclear weapon anticipation. So it means that we are seeing news back and forth. But I think the bigger role is that the market is getting saturated. We're seeing the fact that whales are standing on the sidelines. Retail investors are cashing out, despite the fact that the market hasn't done as much as it did in 2021. and the fear of the US dollar breaking all risky assets has made crypto investors shaky. So that's really what's happening right now.
Yeah, well, I guess it's the realities of our time. Almost every market is shaken at this time. Thank you so much, Olumide Adesina, financial market analyst, for sharing your thoughts with us this morning.
Thank you.
So that's where we draw the curtains on the program today. Thank you so much for being a part of today's show. We have another one tomorrow, but at 1:30, we'll be here with Business Incorporated to give you the update from the world of business. I'm Ini Jodmeko, and I'll see you tomorrow morning. God's grace.